And away we go, folks, here on another Tuesday session. Let's go get that and be one with the community. How's everyone doing today? Big shout out to the crew. Had a great session yesterday, and just want to be real, folks. Want to be real as we can be as we make our way through these markets, the gyrations, the ups and downs. Big shout out, Snipes, PD, what's up? Observer, Laser D, Victoria, Westy World, Ziggy, as on all the rest of the guys, Pony Boy, what a great tune. Dickie Betts, Allman Brothers Band. Anyway, couple more stories, Allman Brothers stories. Maybe someday I'll share those with you folks. But so what do we got? What happened? Well, Ethereum. Let's take a quick look. Little bounce off of 1200 and little trying to reflex this rally. But pull up your 5-minute charts, please. And again, I think we want to stay on 5-minute charts for directional gyrations as this thing continues to wiggle its way down lower to our eventual target of 600, basically 650, 680, 630, depending on your data feed for Ethereum. Nothing's changed. So let's just be real with that. Let's get some business out of the way. Folks, everyone that's new, your harmonic pattern journey begins at harmonictrader.com. Become a basic member and take advantage of these resources. Get with the software. That's what I do. That's my angle, is my software. Why? Because it replicates my brain. It replicates the 4 books that you could study, and you could measure everything manually. And I recommend that you do that. But I still say that the true harmonics are only going to be found on the algos. And I do want to, before I get any further, I do want to look at the Bitcoin futures chart. I think that's a telling chart because what we did hit yesterday, overnight actually, and I find it's interesting that it took until today to actually reach that level, is we know we failed the immediate deep crab. That's failed, gone, trash. Later. And that's a 4-hour chart, but the daily time frame had a pattern that was lower, 19 something on the hop, and you have these 2 levels here, and these are 2 levels that I had addressed. I looked at some prior videos. I'm trying to go back to when was the first time I really was saying this hop level was a possibility. Maybe I'll do some replay Thursday, but I've gone back. Actually, looked like I was saying this in January. And so let's just look for something. Maybe a pause. Maybe just some sideways action. I'm not touching crypto. I do believe that what we need to see in crypto are major patterns like we saw on the last 2 cycles. But absolutely don't be surprised if we see a mini bounce, mini pause. And for goodness sakes, I mean, you're 12 going on 12 weeks down. 12 weeks down in a row. Not just down, but down in a serial fashion. Serial meaning bar over bar. It's something I talk about in the Volume 3 book. So if you want to get that book, go to Basic Members and just click on that link, and then bang, you're into Harmonic Trading Volume 3, which will teach you about serial reversals, divergent reversals, all kinds of stuff like that. Check out these books, folks. I know the younger kids not necessarily reading so much these days. They prefer the videos, which you can get on the Basic Members page as well. Check out that library. But it's all there. And again, start your journey with the basic members page. And then I've got a lot of requests for, do I teach? And do I offer one-on-one consulting? Normally, no. I did have a certified program that I closed, but I think due to the number of requests and I feel like the need is there, that I will consider maybe doing some consulting one-on-one, but it's not going to be cheap, and it's just, you got to understand my time for what I do with my time. So many hours in the day. I'm also a new dad, and there's nothing more important than being a husband and a father to my family. So with all of that, I'm balancing life with the work, but I get a lot of value from what we do here. I really do, and I appreciate the chat, and I appreciate the experiences that I've been able to plug into, make this a little more fun. Like I was saying yesterday, thanks again to Mitch Ray for yesterday and all of his crew that are here that have embraced it. You know, this is why I do what I do. It's pure trading, and I want to be clear that I want to make sure everyone understands that I'm a trader, folks. I'm not a tech guy. I've always done with the markets, dealt with the markets. I have never worked, at least since graduating college, in any other capacity than the financial markets. And this is what I do. Most of what I give away is for free. Of course, there's subscriptions and people do subscribe. But, the software and the tools, the technical strategies that are changing the game for people start in the software. And there's plenty of free resources to boot. So, I appreciate that. Yeah, someone's saying they like the 5.0 in Volume 2. Yeah, the Volume 2 is a great book, and it has the 5.0 pattern. It has a lot of great confirmation strategies. It's this book right there. That's your Volume 2 book. That was the follow-up to the Volume 1. This was 2007, and you got a lot of the non-M&W things in that book that are still harmonic metrics. Also, we've got the one and only, well, actually, yesterday I was pulling up from that book, the BAM ideas, the Bad Action Magnet Move. And then stuff like confirmation strategies, like confirmation with a 5.0, RSI, amplified. Well, we don't talk about amplified, just RSI and RSI BAM. But they all apply to the same strategy of looking for the combination of indicator and pattern dynamics to give you structural edges, structural advantages, plus confirmation. When you get the chocolate in the peanut butter, that's when you get your favorite, or at least my favorite, Reese's Peanut Butter Cups candies. That's what we need to see with crypto. We don't have it. That's what we've been talking about. Non-confirmation is, it's a bitch. It's a bitch, not confirmation. If you don't have confirmation on anything, even if you're Elliott Wave or you're drawing a wedge or a trend line, if you don't have some kind of indicator that's telling you the extreme is over, then you have nothing. Maybe a reaction at best. Stuff like this where BTC on the weekly, your amplified RSI, that's what that is. Showing you that this thing is this last candle down that's happened this past week is devastation. Isn't that a cologne? Devastation. I wonder what that smells like. Probably pretty nasty. But I appreciate that. I appreciate everybody participating again. Yeah, I guess hit the like button. I'm not even about that, but people are saying I should mention that more. Hit the like button, subscribe, join, get with our program. But again, look, the whole boot for me is to change the game for trading because of my own personal experiences, having seen so much shyster activity. And I'm talking going back to the 90s, folks. Even pre-internet, this stuff was rampant. Guys that were hawking stuff and never had any business doing that, or Lots of stories. I'll have to save them for another time. Let's get into the work. But it all starts at Harmonic Trader. Yeah, why not? You're right. Let's show the disclaimer. This is educational, hope or entertainment. I hope you find educational, not financial advice. Let's get back to the severity of the indicator situation on Bitcoin futures, because the 22.5 number, we talked about that. I looked at some of the stuff as I started today. Looks like somewhere around January is when I started entertaining the possibility of 22.5. So then why would I be so dismissive now that we're at 22.5? It's because of the character of the action down here. That's where bringing in a basic price action analysis is important. And it's really just looking at trading individual bars as a set of data, which it is, and then identifying what's going on in those areas that would suggest whether or not that harmonic level is truly holding. We should see responsiveness at our levels. We should see confirmation at our levels. And if you don't have it, you have to be patient, which that unto itself is a difficult thing for traders to do. Sometimes they want action. And I'm of the opinion at the moment that you've got a lot of oversold situations. I'm still saying that, all of the bear market scenario and the stocks, crypto, it's happening. It's triggering. It's accelerating. But you're going to get a few up days, even though today's not up. I mean, today's no. After the last couple days, you have something like that and you don't have a vicious reaction rebound. Again, what does that tell you? Here's a prime example of that idea. And I mentioned this on Twitter several days ago and then did a quick update. I've been railing a little bit against some things I've seen, it just drives me up a wall that people, the things people that have 10 times the followers or more, 20 times, 30 times the followers that I've got 15,000 followers on Twitter. Guys that are mainstream people, ladies and gentlemen that have 150, 300,000 followers who are saying, I'm buying this, I'm buying that. Yet, and they continue to do so, is troubling. It really grinds my gears, as they say. But where was that? Get back here. There it is. So this is a perfect way that I look at harmonic patterns. And I think I recommend that everyone does. We know some of the strategies that the questions that I ask myself within the harmonic pattern framework. And so this was on the 10th or the 9th. And we talked about this, recently, of saying, okay, here's a beautiful crab pattern, major pattern on the Nasdaq. What's it doing inside of that zone 30 bars later? And it's, as we saw, it just failing. It was evident to all of us that was failing. So not an opportunity, but that's one of the beautiful things about the harmonic levels. You're usually going to get a reaction if you have confirmation. No confirmation, maybe you get a pause sideways and no follow through. So we have to make decisions as traders. Okay, we are dealing with in an imperfect environment where, yes, anything can happen at any time, but within that framework, it's pretty easy to make the assessments of saying, hey, this isn't working. What do? I scratch it. And scratching, which is, we come back to something I did Thursday night, and I mentioned this as well about my position in Chili's. It exemplifies that whole notion that if we want to survive and things don't work out within our predicted framework, okay, you got to scratch. You got to save your capital. Don't trap your capital. Here's Chili's. I was dumping that, basically a flat position, did nothing for 25 days. I dumped that on the midstream on last Thursday night of a it was like a $15,000 position. I was hoping maybe catch like a 5 grand move up to 17 cents, but it didn't happen. It broke the trend line. This is where we have to take action. It's not the action we want to take, but a couple of sips of whiskey and a lot of talk with the crew of just saying, yeah, I've had it. I've reached my point, and so it saved myself a 20 something percent downside drawdown. And even in that stream, I said, look, we got to target hop levels. Even if we want to target hop levels, we have to be real with ourselves that that's probably where that this goes eventually. And again, these are all automatically generated. I follow these levels every day. This is what I use as my primary identification methodology to define opportunity. I should break more glass. Yeah, I should break more glasses. It's a very cathartic thing. Break a dish, break a glass, but again, I just want to be respectful of the character of the market. As enthusiastic and as great as it was a year ago, here we are now on the dirty side of the hurricane, as I like to say, with the need to default to your longer term time frames. And this is something else where the markets are a marathon. That's kind of the theme for today's topic of how do we last? How are we going to make it through times like these when the mantra, and even people like, all right, I don't know this person, but boy, she came across my desk this morning, and it just really was like, how can you be saying this? This person here, Rafaela Rigo, Brazilian, I think. I love Brazilians. I love Brazil. Brazil's great, but come on. On the 27th, she's buying these projects and they all drop 50%. Well, what does then she say? And these are people like she has how many? She's 123,000 followers. Okay. And she says she's 90% technical. How could you be 90% technical and come with the conclusion that you are? So it comes back to this. Everyone that's here, you have to understand, you can listen to me all day long. You can listen to everyone. You still need to make your own decisions. It's my hope that with providing the resources like the free books and videos and free trials of the software, that you understand you're learning a complete methodology strategy to make the decisions yourself. You can follow along with the things that I say and recommend. And I don't shy away from any of it. And I really do hope that, my posts, my tweets, my comments are representative of real-time assessments, not just, hey, in 2027, when the next cycle comes around, everyone's going to be a millionaire. No, it doesn't work like that. It's absolutely important to realize that we are here. We come together every day. You join the community. You get on the Discord. That's something else that I forgot to mention. I've been told to mention is that, join our Discord group, please. Go to the basic members page and just scroll down. It's there. And get with like-minded people because we need to come together. In the face of all the nonsense that's going on, what happens during these times is that the fundamental narratives, they just get annihilated and people go back to the technicals. And there's a whole field of technicals. Here I focus on the technical area that I created, which is harmonic patterns, harmonic measurements, to define the total framework of what we can expect. Let's ask questions along the way and make the proper assessments. And if you don't have those right ingredients to come together to find an opportunity, then you have to be patient and look for things that do. So appreciate that. I think it's a combination of measurement and basic common sense as well. Of saying, like that Chili's thing. For me, just I sat sideways for that for 2 weeks, wondering, okay, are we getting anything? And then I just, with a little help of the crew, a little help of the chat. One moment, one moment. So let's just be patient with these charts. We see that Bitcoin is, barely up $100. Ethereum, and after the devastation, it was down 4 grand yesterday. Ethereum, much the same deal, up 2% off of this bounce low, whatever it is. It's not there. The other takeaway to understand, folks, is that even as nasty as this has been, this stuff takes time. It's going to take time to realize the targets. An easy way that everyone can do, just to get a basic understanding, is draw your trend line. How do we draw a trend line? You start at your inflection point. You encompass the first 2 or 3 bars to make sure you get the proper slope. Maybe you can get a C point and take it down. That at least gives you some kind of idea of what this downtrend slope could potentially yield. And we fit the pattern inside of it. So the pattern here, maybe we should spread this out. Let's get this pattern like that, where we can encompass the CD leg of drawing that, where your basic sloping trend line pattern, connect the dot configuration generally tells me this does not end until September at a minimum, that this larger downtrend will go till March of next year, and you're under the weight of the primary downtrend. So to be buying here is really just a proposition of saying, all right, well, I'm willing to go through more drawdown, and going to 600 or 650 is another 50% decline from these levels to our minimum targets. I just think it's critical that some of the basic tenets of technical analysis, combined with harmonic patterns and harmonic measurements, harmonic levels, build the framework for your decisions. And there's always plenty of time for opportunity. Maybe someday there will be another massive buy opportunity on Ethereum, much like we got way back here. Where'd it go? Where am I weekly? Oh yeah, well, like that. Like that beautiful bat pattern from 2019, and a lot of the bat patterns that started that bull market run. But look at the past examples. And all these crypto guys want to go to the past and say, this happened in the past cycle, so it'll happen again. Well, here's what happened on your stabilization phase. Here's what happened, until you broke the trend line. You were under the weight of that downtrend until you could break it. And then you were still 8, 10, 15 months, depending on your coin, sideways until you made progress off of that low. So let's see. Stephanie, can you put up the Discord link for everybody? If we're having, folks, we got hit with a Russian bot 2 weeks ago on our sign up. So some of you might be having problems on the basic members sign up. Stephanie, please put the Discord link so they can at least get to the Discord link, and I'll look at that if we're having another problem. Thank you, Rael Bertrand. I hope I'm saying your name properly. So uh, go get with the Discord for now until I figure that out. Thank you. But this is my argument. Nothing's changed. You're looking for a little counter trend rally. You would hope, but there's nothing there to bounce off of. But maybe a 1-2 day thing, maybe. But there's nothing here. I would be looking at other asset classes, and again, I'd be looking for. I would just be getting ready, doing the prep work. Now is the time to prepare for these lows when they happen. Now is the time to line up other asset classes. If it's crude oil, natural gas, natural gas is correcting huge, was lock limit down. We talked about that last week. Crude oil is some pumping today, others not. And then we'll look at maybe some immediate opportunities we can jump on, like Coca-Cola, which is actually down today a little bit. But this market is going to rotate to other areas to continue liquidation. All right, great. Thank you, Ryle. That's it's telling me that basic membership is okay. Couple of questions. Miss Stephanie, we didn't connect this morning. We'll have to connect later. I've got a few things this afternoon, but I'll take a few questions. But we're going to move into gold, silver members getting access as questions. So what you want to do is you want to ping Stephanie. Just ask your question to Stephanie, and we'll make sure that you get to them. But a few of you do have questions. There's a quick question. What's the main difference between institutional traders and retail traders? Institutional traders have money they can lose, other people's money. The institutional traders also have massive leverage capabilities, and they have size, which we don't have. And all of us are small fish. If you have a 3, 4, 5, 6, 7, or even an 8-figure net worth, you are a small fish in a giant sea of multi-billion-dollar traders. So our job is just to apply the framework, look for those opportunities, and take our shots. Beyond that, realize that the market is controlled by a large central liquidity pool, mostly the Fed now. But we can listen. There's a ton of opportunity in this market. Some days we're not going to be fishing. I think after yesterday and today, you need to let this breathe a little bit and let some a little late to short, no doubt. Even though, yeah, I see S&P's at the new low over the day. Really quick, let's just jump to there. Let's go to S&P futures. We're down again. Phew. See, this kind of stuff tells me we are in the middle of a not capitulation, but acceleration phase. Hopefully, we'll get to a capitulation. Oh, look at that. There's a beautiful bat pattern overnight. And then straight down into a 1-2 framework. 37.33, 37.23. This is why 5-minute patterns are important. If you want to day trade, which I think is probably going to be the theme for the summer of 5-minute charts, yeah, you can buy and sell as long as you're in and out, same day, same morning, same hour, and do scalping. Unless there's maybe an energy play or commodity play that's going to work out, which I'm looking at things like corn and wheat. Some of those have come back, and I don't think they're over yet. Even crude oil. I said this yesterday. I felt like crude oil could give us a correction and then be another major buy lower. New low. So the last comment, which I think is a great one, Mark Klatt. You didn't have a desire before to become a trader until you started watching Mitch and myself. Listen, Here's the thing that I believe most people feel like they have to get to. That you have to be some kind of hotshot big guy, or you get over intimidated by other people or influencers, or I did this, I did that. No, please understand, this is a journey, this is a marathon, and it's things like this that need to be said so that you can survive and you can develop this long-term skill of being able to identify opportunity in the market, or even know when to not be in the market and preserve your cash, but to be thinking all the time like a financial manager, a fund manager for yourself, for your life, for your family. This is a skill, and it's technical analysis in general. That's why I say go watch Mitch Ray do his thing 7 nights a week, because he's a master of the technicals and integrates harmonic patterns beautifully. I would do it that way, but this is the harmonic patterns of my life. This is me. I am all about harmonic patterns. A lot of that I do, I think, intuitively, but I think the knowledge of technicals and looking at charts to be able to understand where true opportunities are, rather than getting some kind of advice from somebody off of TV who doesn't really have your best interest. Somebody like Jim Cramer, I mentioned him yesterday, saying, "Oh, we think the market's frantically bottoming." What does that mean? That means nothing. It means he has no clue. Even a guy like that. That's my my rant for this morning, to get off the rants. But this is serious stuff, and I take it extremely seriously. I as kind of a gift back to all the people that helped me. That's why I make this stuff free and still do the subscription, other side subscription. But again, if you can't get started anywhere else with harmonic patterns, this is the place. Now, let's dial it back. We're on harmonic pattern collection, by the way, for TradingView. This is where I really want to focus in on, because before I jump to stocks and the other markets, I do want to look at total crypto market cap. This is going to tell you the deal of crypto as an asset class. And I don't agree with even some of the stuff that these guys are saying. Like, I saw Kevin O'Leary. He's a billionaire, okay? Kevin O'Leary, he's got his own funds, self-made man. Okay, great. I have all the respect in the world. But he's saying that crypto is going to be the 12th asset class that you need to consider. No, not until everything at least stabilizes. Sure, Bitcoin may be there for a long time, but what price? What price? That's for any market. What is the price that defines the opportunity? Because a lot of people bought Amazon in 2000 at 100, and then it went to split adjusted $30. I think there was like 15, and then other well-known internets went bankrupt. Think about Yahoo. Yahoo was the biggest search engine in the world. They were almost bought Google before Google went public. Okay, now they're no longer trading. And this is the thing about the marathon of the markets, that what you find is rarely do people go away from the markets. If you love the markets, this is like a musician. You do this your whole life. I do this my whole life. It's because I love it. And I hope that you all can find the joy and love and fun and freedom that I personally have realized in my life because I pursued this. There's nothing else I could have done in my life. Maybe I could have been an accountant. I was a accounting major. Maybe I would have been a CPA, but I don't know. I mean, I spent time early on the floor in '87. And ever since that experience of spending a summer on the floor of the stock exchange in Philadelphia, I knew that bug bit me so hard. I was like, this is what I want to do. I want to be involved with the markets. It's come at a very roundabout way. And I never planned to do it like this. Never planned to be doing Harmonic, MW, whatever. But that's my evolution. These are the tools, these are the metrics and strategies that have enabled me to get to where I am. So this is just about 99.9% organic creation here from my experiences of decades involved with this. So we're looking at total crypto market cap. You're a big believer in crypto and everything that they told you that would happen from crypto and the freedom, decentralization. Well, that's all getting busted. But as a digital asset class, you know, if we're looking at that, if that was the semiconductor index, and that's exactly how I would look at crypto as just another tech, as a sector within tech, not a total asset class. It's just a sector within tech. I would still say that has a long way to go down to your 886. Total crypto market cap, folks, gets you to 450, 425, somewhere in there. That's we're in that BAM phase. And the funny thing is that at least for total crypto market cap, there's your BAM breakdown, and that really triggered in April. And I guess, or no, that was May, folks. We didn't get the BAM trigger until first week of May, and I think I was really barking about this. I was away. I was on a trip out west, but still doing some streaming. But I was not happy with this whole progress, and even what we were hoping for, I've been saying look for a reaction off of that. There was zero continuation, and if you recall, I was just upping the stops on total crypto market cap and Bitcoin. Once Bitcoin cracked 37,000, you folks know how I've been on this. With the total crypto market cap, it was really about the long-term uptrend too. Look, just violating up the long-term uptrend without any reaction whatsoever. If you go to, say, total 3 without Ethereum and without Bitcoin, even those, you have a bat pattern, no confirmation on total crypto. There was your terminal bar, and that hit at 474 billion. You're now 354 billion, and there's no confirmation. Zero. Look at your indicators. This is a really easy concept to understand. You can use standard relative strength if you want, if you're going to manually draw, or get our proprietary indicators with the program where this is amplified RSI, hypersensitive RSI. Just ask yourself, what is that doing in the overbought extreme? It's swimming deep. It's expanding. What is Harmonic Strength Index doing? Because we do nothing until it pops out. When this stuff expands in that way, okay, it takes more time in that predominant trend, much like it did on the upside. Check this out. All right, look at this massive move on the upside on HSI, where we deeply went overbought. And that did not stop going up. I mean, we entered there. You entered overbought HSI, okay, and that was August 2. And then you finally pivot out. And now, what was that? That was at 600 billion. And you finally got your first signal out at 900 billion. That's a 50% move. And then didn't top out for many weeks later. But that's the kind of character you see. And it's my hope that I can draw your eyes to the key points and say, hey, when that happens, this is the kind of price action to expect. In this instance, if you're deeply oversold and you're expanding in you're expanding in this oversold territory and you haven't even given you an inflection up yet, what you expect is a serial bar over bar continuation until I get at least one green candle or one, even the pivot out of the zone. okay, is necessary, and then a green candle. So you're not jumping, you're not trying to catch the knife. And as I said before, with all of these, okay, you draw your trend lines, and it matters. Like, you got to encompass these two peaks. This long extended trend line stretches out to 2023. The accelerated trend line, meaning that's a little bit steeper of a slope. This is what we call a primary downtrend line, and this comes from volume 2 and volume 3 if you want a reference point. This trend line, an accelerated, and it's exactly what it means, accelerated continuing action in that predominant trend. Well, that has to at least break at a minimum. So you do nothing. You pause. You are cautious, careful. We're running the marathon. Running the marathon. You are, let's say you're on this bear market marathon. You're probably mile 13 of 26. Anybody a distance runner in here? I used to be a distance cyclist, but that's a whole nother story, which I probably need to share with you folks at some point in a very formal, serious way, because it's a big part of who I am and how I've overcome the challenges in my life. But all I got to say is, folks, never give up. Think for yourself, study, push yourself to be better every day. So critical. I hope I can inspire folks to do that and to realize that this is a way forward. This is a way forward. Should I break a glass on that point? Yeah. So that's our trip for crypto. And again, I think the total crypto market cap will continue in this serial fashion down. 450, 440 billion is the absolute low target, minimum target, 886 level, and I think we got to look for more blow-ups. The final one and the big one that would really concern me is if Binance Coin does have some kind of major issue. Here's Binance Coin, BNB. Talked about this briefly yesterday. This chart doesn't really have the structure. Really, there's not a heck of a lot of structure on your weekly levels. And again, your 886 level on Binance Coin, $87. Yes, dollars. And nothing there on the daily that even suggests anything. Still, let's take all the patterns out. You can do this with every coin, every crypto, every market. Look, until you convincingly get to the right of that downtrend line and show me something, you're going to swim. You're going to swim underwater. Absolutely. Hey, Arun, welcome from India. Thank you. All people from all over the world. Great, and they're getting it. I mean, it's great. Look, I'm very happy to see the progress that we have made here in the community. I shied away from it for a long time, and then since we started the podcast, it's been a real boost. And then getting with like Mitch's crew, you guys have been great. I met a bunch of them back in August or what was that, June of last year, and we might be doing a meetup again in August, so we got to talk to Mitch. Rouse Mitch. I got to get Mitch to confirm for that, and Mitch and Brad to say, yo, okay, we're going to do that for sure. They're talking about coming to Miami, so why not? A little hurricane party. Let's jump over to these markets. S&P is down now. Let's look at what's the S&P's off 20. Nasdaq's only down 35. That's okay. Dow's down another 252, which, here we go, could be a real slide. A real slide. If I was looking at this, I'm not. I've got a doctor's appointment today, but I would be, if I was looking for a long opportunity. Well, you're trading 37, 34 at the moment. But since we're in a type 2, go to the hop on this crab at 37.23. So let's see if that happens during our session today. It's another 10, 11 lower from current levels, but that's where I would look for this. If I was looking for a counter trend rally or bounce on S&P futures. But remember, S&P did a major thing yesterday. Major. And let's just bring up this harmonic spread. Okay, ratio spread looks like this. I mentioned this briefly yesterday. I want to get into it a little bit more about what is so important about this 382. Because the 382 level of failure of that always leads to lower, or at least a deeper retracement is a better way to say that. The current 382, you had a bounce. You had a reaction on that first move about 38.20. But now, that's not only is that over, but you had the little sprout thrust that on this move, week over week, probably by the end of the month, you're 34.86. And then we do another sprout up for a week. And this is going to be our summer. We zigzag and step it down until we get the big drop, the 24.72. Again, my targets are much lower than anyone is saying on the street or anything you're going to hear. People are thinking, oh, maybe 3,500, maybe 3,200. We have violated the structures to the point, and we have no confirmation. Look at this. Amplified just went back down into the zone. HSI is rolling back down. These are weekly levels where that comes back in. This would have to pivot out immediately, and we're not getting that. Go to your daily for S&P 500, folks. Okay, daily. I mean, you don't. If we all can agree. All right, we've got a daily. It's funny. We've got a daily crab hitting right now. Beautiful, beautiful pattern. The software is generating that match. Your job now is to look into that zone and ask yourself, what's it doing? There you go. What's it doing into the zone? Okay, and what is it doing when the terminal bar has completed, which it just did yesterday? Let me highlight the terminal bar. Here you go. You go under your settings, folks, and you have all these. We have all the different settings. Just increase that from 4 to like 33. This really should be much bigger than what it is. There it is. Could even be 43, 44. Get a big sun icon, big and bright. Because the way the framework and the way that we assess opportunities is, if we were wanting to get long, it doesn't even start until today's bar, the +1 bar. And what do we know about the standard reaction from harmonic patterns is that they're going to take 1 to 3, 3 to 5, maybe 7, especially with no confirmation. No confirmation here. HSI, deeply oversold. Amplified. RSI, that's what this is. We substitute amplified RSI for standard RSI. You can use RSI, but our amplified is hypersensitive to show us kind of as like a leading indicator, and it's not there. So that tells me 2, 3, 4 more days deeper between terminal bar and hop, maybe as low as 35.46, which is almost 200 lower from current levels. I would always, be ready on a pattern like this, but I absolutely regard the action into the zone. Tell me how it gets into the zone as well. And these are 3 large daily candles where you're down 10% into that zone in 5 sessions. One moment, one moment. So that's how we read it. We want to be patient. We want to run this marathon, um, because maybe we could get a counter trend bounce down here, but until this registers and even ride your trend line into the zone. These are simple techniques. Maybe the most difficult part is to know what pattern to measure or how to draw it, but the software does it. Then bring in simple strategies of trend line or waiting for the confirmation. Yeah, James. James is asking if HSI is more sensitive than amplified. I think maybe the better way to describe it is that HSI is more. Oh, what's the word? I'm overusing that word binary of really going from extreme to extreme. It really has this character of HSI moving from one level to the next. That's how it was designed, so that we can determine where the true overbought, oversold levels are. Sometimes RSI can be give you false signals for sure. That's why you want to line up more than one variable. But HSI, what the key of it is that you have to be patient to let that thing do its dip into the extreme, wait for it to come out, and then look at what it comes out. Because I think it's more sensitive after it completes, and it's a more reliable in terms of at least giving you some kind of nominal reaction, even if it's a pause or if it's some basic consolidation. But that's what Harmonic Strength Index does. It's a proprietary indicator. It took many years to develop and really nail it with the patterns. But although I knew the type of indicator that we needed with the patterns, it's based on RSI with a lot of tweaks that help to accommodate for things like this in RSI when you get multiple readings in the same extreme. So our goal is to use it with HSI, and we use it with once the pattern has completed. All right, there's a true sequence that we want to see: pattern completion, and we want to see some kind of stabilization, and then the confirmation trigger. We're not there yet. We're not there yet, and we might not be there for a few more days as this goes lower. Yeah, you're still in the oversold. I never want to be there when I'm deeply oversold, looking for, and trying to anticipate that to move out of the zone until it does. Absolutely, Jay. Jay's saying when you get a PRZ blowout, meaning you blow right through the zone, and that's in volume 1 and volume 3. Let me show really quick little educational primer here. Is that volume 2? Yes, that is volume 2. Let's pull up volume 3 and show you kind of the model of what to expect when we have such extreme price action, which we do going into these zones. Go to volume 3, and I think it's towards the end of the book here. Where are we going to go? Real blowout stuff. When we go right through the zone, because it matters. I'm going to have to figure that out. Where is that illustration? There you go. It's things like this. And it's something else that people don't understand. The common knowledge, I feel, needs to improve about, what are the expectations of harmonic pattern zones. This is straight out of my volume 3 book from 6 years ago, where you get extreme price action through the zone. That's crypto. That's S&P. That's the markets right now. And they do stuff like this. Okay? This stuff repeats all the time, folks. And when you overlay the proper measured framework and you see that same price action, well, it's a warning sign. It tells you something more than just a nominal failure is going on. I mean, it's you break the terminal bar, you sail right through, you fail the pattern. Okay, even if you go sideways, and like in these examples, you go sideways for a few bars here, but then you roll over and you continue lower. And once you fail, it's not just a little failure. That's the key, is that you go much lower. You continue if you're on the upside, like we saw in some of the breakouts, where you have a bearish pattern and it just goes right through like this. That is indicative of a trend continuation on any time frame. That's how to think about it. But the pattern itself showed you the area to be looking at. What happens in that area is what determines the opportunity. Are you going to take that trade if it blows right through? No. No. And without confirmation? No. We're looking to line up those elements, get confirmation, and nail it within a certain zone. Be mindful of all of that. Let's go over quickly. I wanted to bring up, let me go to the SPY. Let's go to the diamonds first. Dow diamonds on our harmonic pattern collection. Because the diamonds and the Dow and the S&P 500 seem to be playing catch up in terms of versus the Nasdaq. The Nasdaq has been leading the way on the downside. I wanted to show this. We've talked about this bullish butterfly pattern that followed a beautiful type 1 move up. And this one had price action that was severe into the zone, but it stabilized and reacted. Okay, didn't blow right through. You did stabilize for a few bars and were able to get a type 1 reaction, but then rejected back down. So here's where we go for the type 2 on the diamonds. And we're deep in that zone, and this is the kind of price action on the return that is a lot clearer of its severity. Look, massive gap down, continuation down, red candle, red candle, red candle, another red candle follow through. Who's going to buy that? I don't think it's deeply oversold, but can keep going lower. Your hop level is at 300. Translate that to 30,000 on the index. And that is a huge psychological number. If that fails and we have no confirmation, what does that tell you? Same thing. You go lower. Take a look at your indicators. On the daily for the diamonds. And it's a good vehicle to trade. It's a good vehicle to follow for the larger markets. But until this thing pops out, you're deeply oversold. Down here, amplified, trying to start something. But as long as you're in that deep extreme, there's no action. There's no confirmation there. It's a potential continuation. And then if we do fail, and let's say we trade 299 on the diamonds, as soon as that happens, you want to kick to the weekly. Tell me what the weekly's doing. Okay, because the weekly, if your primary time frame is a daily chart, and then you're looking at a weekly level, what is that doing? The blue means there is a potential bat that the software is tracing out, but you don't even consider it until it turns green. Not to mention, it looks like this. I turned off the labels for the pending patterns, but let me just trace it out for everyone. There's the 886. Tell me what's happening at that 886 level. 886 translated to the index is about 30,500. And for me, all you really need to know is that if that fails and you look going left, there's nothing. That's the significant issue with the current market of not having anything else to grab onto. You have this massive prior unfilled gap at about 28.2, and then you're quickly into a deeper drawdown scenario. It just is. Here's a Gartley. Okay, this is a Gartley from 2008. And these are auto-generated, but look at what you have here on that Gartley from 2008. All right, that was the completion. That's a weekly chart. Terminal bar completes, but there's the confirmation up at the hop level, so we're favoring it a little bit higher, but you see individual bar reaction. Let's just push it to the right of the chart. And all of these that we're assessing now, or any bullish pattern that we should consider, should be able to give you something like this. If we're looking at the zone and we're breaking down the zone on a weekly chart, if we're jumping in right at the minimum numbers, well, you're going through a heck of a lot of drawdown on that short. Or wait for the arrow. That's HSI, that's your confirmation, and then go to the right. And red candle, second red candle. Those are some warning signs, especially the inability to get above the hop level, and then the breakdown occurs. Okay? That's how you assess the difference between one pattern versus the next. And it can be as easy as just waiting for the confirmation like we have here of, a bearish pattern with an overbought indicator, overbought HSI, overbought amplified. Those are things you can position quite well on and know that there's an expected move that should occur. That's where your risk to reward's greatest. You can quantify your risk the clearest, and then follow the indicator action down or in the direction of the reaction which it gives you. We have no indicator following this kind of current. There's no bullish indicator development currently. These are the strategies that are going to keep you out of the bad positions. And certainly jumping in when people are saying things that they shouldn't be saying. Definitely. Appreciate all of that. In my volume 1, James asking, I mentioned a gap invalidates the pattern. Yeah, if you gap through, James, a good question. Like if we have where'd it go? There you go. If you have a real nice zone and not only extreme action, where is that? Not only extreme action, but gapping through, meaning, and it happens a lot. That's the key thing, is it happens a great deal. I'm going to have to go find that elsewhere. I don't know what happened to it. But when you just simply bypass the zone with a gap, yeah, that's another invalidation factor. Also, why we're waiting for terminal bar. Terminal bar looks like this, folks. There's terminal bar. Okay, this is your ideal scenario of what a terminal bar should do. And maybe it's oversimplified. Come on back here. Where'd you go? All right. Terminal bars and your major patterns that you're seeing should hit the zone, give you individual bar confirmation that agrees with the pattern. That meaning, if you have a big fat bullish pattern, you better see some bullish candles develop against how it completes. And in this one, this is a overly simplified example, but yeah, we should be looking for serial, meaning continuous bar over bar behavior that agrees and matches up with what the pattern says itself. What happened to me? There you go. Like this. And these are this book's old now. This book is dated. But it's, you go through history, and once you learn the framework, and you can go to any decade, any market, any time frame, you're going to see these dynamics repeat over and over again. A gold ETF trading at 64. No, like triple that. But it looks like this, where you should see a reaction in that zone. We're not. In the same way we've been really calling out Bitcoin and crypto in general for its failure to respond, those were warning signs, danger signs. And where's the Dow now? Yeah, we might rally back or down a buck 25 on the index. You might. It's been a washout. You might get some kind of counter trend rally, but if I was looking for the diamonds for next opportunity, I line up this 5-minute shark. Maybe come back to that 30,900 level as a swing kind of continuation. We're in a unique time where you just have to kind of be patient with it. There's an example. Look, check it out. Here's a deep crab. There's your XA level. All right, hits the target, forms the terminal bar, and the next day it's a gap down. Does it on the close, completes the pattern on the close, but then gaps down the next day. Do I expect to have a similar behaving terminal bar within a type 1 return? You mean a type 1 reversal? We know that type 1 and type 2 are different creatures. So type 1 should be more reactive. Type 2 takes longer, which is why, for example, on a lot of the setups we've been looking at for the major moves, or even let's go really quick back to that Bitcoin futures chart. Bitcoin futures, folks. Again, I'm going to pull up for Thursday. I'll pull up the first time I entertained the 22.5 level. For me, I know it was about this. It was really like if we fail this, that was my concern on Bitcoin, that we would see deeper levels. And then I do recall saying, okay, we have this looping type 2 that has to come down. But what do we know about those type 2s, especially something like that? It can be sloppy and does take much more time. You go back to last summer, okay, we at least hit the zone and had a reaction. Not completely really ideal in terms of the type 1, type 2 dynamics, but you saw this thing reacting off the numbers, even though it took a while. And that's actually longer than normal. But the type 2, I mean, really type 1s should be like this. That was a beautiful butterfly up top. But now, this as a type 1, and I've been saying this since May, is not ideal for a type 1 because we were, 10, 15 bars doing nada, and that's usually what I call a harmonic dud. Just not going to yield. Not only going to not yield a reaction to 34,000, but has to go deeper back into the zone and trigger some kind of confirmation variable. That's where we are. I still would at a minimum, you look at our HSI, look at our amplified. Let me take all that off. I probably could bring in with this one. This is harmonic pattern collection for E-signal, folks. I think this is the Cadillac of them all. You should start with TradingView by all means, but I'll bring in RSI, standard RSI, which we have on this one. So there you go. All right, so the bottom indicator is standard RSI, and even if you're doing, which you can do. You can try to do these manually by hand if you want, but please use RSI as well. And even with RSI, standard RSI, where that is, you're still deeply oversold here. And you're in the zone until you can do an inflection out like you did on the first test, at least that registered, you got nothing. And you have to wait. What it looks like to me, believe it or not, is HSI is going to do a pretty funky consolidation and then give you another devastating bearish HSI signal in a bullish zone. which always leads to that taking more time at a minimum, if not being the trigger of a failure. I mean, we might come up here, we might go sideways. Maybe a little relief rally or something. But my fear for Bitcoin, and this could be into next week, and it's probably a good place to leave it for today. A harmonic strength index overbought condition at these lows that would then take you down. And I will show you, let's finish it up with here. It's from this chart. We had that on the spot price. That's what set this off. That's what set off, go to the daily. Okay, we had that. This is perpetual contract. We have been talking about, most of the folks that are here know that we've been talking about this deep crab since I got back from Arizona, or I was in Arizona. We were talking about this. And then last week we got this vicious HSI on the spot price, and it was a bearish HSI signal against a bullish pattern. That means it's always going to take more time, and it's a scratch against the reaction, if not to go lower until we get the next bullish reading. And that's what happened. And this one, I said this yesterday, on this move, we almost got there last night. I would really think that the hop level at 19,742 is a big number that off of this crab pattern you want to look for. Maybe HSI can give you some kind of inflection there, but until both of those register, Bitcoin is sideways to down until further notice. It's going to be not a friendly environment. You're already depressed, but measuring this out, this is how it works out. Really critical to see that. So, folks, that's what I have for today. We'll be back on Thursday. About 11:55. We're getting, 12 noon's been a good time for, I think, everybody. Become a basic member. Just get over to Harmonic Trader. Get these books like this. Review the material. Get the software. Take your time. Take a couple weeks. Give yourself some time. And then at the end of a few weeks, 30 days, you're going to see this stuff like you've never seen it before. And then it's going to explain, or at least clarify, a framework that can easily be followed so you know where the markets are going. So until then, have a great one. Go get them. We'll catch you on Thursday, everyone. Hang tough. Love you.